The last lesson of this module focuses on additional resources for catalytic investors. We are sharing these resources in case you wish to continue learning about catalytic capital after this training. Let's start with knowledge resources. Across the Return Continuum, published in 2016 by Biomedia Network, introduced one of the first models to distinguish investments based on the expected financial return, ranging from market rate investments through catalytic capital and financial grants. This framework introduced the concept of market level or systemic impact by going beyond the direct impact of a firm on its customers and rather focusing on building or shaping new markets, pioneering new models, providing industry infrastructures, or also influencing policy. More recently, there have also been a number of publications specific to catalytic capital. One of the most cited reports was published by Tideline in 2019 and is called Catalytic Capital: Unlocking More Investments and Impact. It provides the foundational knowledge around the gaps, forms, and roles of catalytic capital. We have reference to these concepts multiple times in this program, and we recommend reviewing that report. In early 2022, the Catalytic Capital Consortium published a frequently asked questions document. This document takes a practitioner point of view and provides clarity on the roles and uses of catalytic capital from a range of different investors, including foundations, development finance institutions, family offices, and high net wealth individuals. There are also other resources that support catalytic investors from a practitioner point of view. I would recommend starting with the guidance notes by C3, in particular Advancing the Practice in Catalytic Capital Guidance Note 1, The Seeding Role, published in 2022 by the Catalytic Capital Consortium, Courageous Capital Advisors, and FSG. These documents describe the challenges faced by catalytic investors at the seeding stage, where most HNI and family office investors operate, and identifies the solutions to overcome such challenges. To access transaction case studies, I suggest the MacArthur Foundation website, which has examples on housing, education, renewables, and conservation. You can also find case studies on the Convergence Capital website focused on blended finance, a way of structuring deals that leverages catalytic capital to mobilize additional commercial capital. Finally, you can follow the Catalytic Capital archive on Impact Alpha to stay updated on deals, people, and strategies for using patient, risk-tolerant, concessionary, and flexible capital. To find catalytic asset managers, check out the Working Capital Intermediary database by Prime Coalition, to which Tonic has also contributed. It lists about 100 asset managers that deploy catalytic capital to various degrees. It can be helpful to originate fund investments and to potentially co-invest. Next, we will turn to innovative legal terms to improve the outcome of catalytic transactions. Please let me be clear, these investment structures and terms are not necessarily catalytic in themselves, but they can rather help catalytic investments succeed and from a more practical point of view. You can find descriptions of all of these structures on impactterms.org, our free library of innovative legal terms for impact investing. Let's start with the structures that provide alternatives to traditional exits. Exits can be sometimes difficult for catalytic investments, in particular in emerging markets. In situations where there are no likely buyers and an IPO is unlikely, or for companies that have high variable revenue, alternative exits can be very helpful. The most common one is revenue-based financing, where a defined percentage of the revenues of a company is committed to repay an investment until a multiple or a time period is reached. The investor is repaid without an exit, and the investment doesn't add stress to a company with variable cash flows. Other alternative exit structures include forced redemptions of company shares, where a company commits to repurchase shares from its investors, demand dividends based on cash flows, and other hybrids of debt and equity. They use multiple mechanisms to facilitate exit strategies and tend to align repayment with company performance, making companies more resilient in the face of adversities. There are also alternative governance structures centered around beneficiaries, which can be particularly important for catalytic investments. The first example that I will cover is giving board representation to customers or communities. One approach is to create a new share class, which is issued to beneficiaries or not-for-profit that represents them, with defined decision or veto powers. Alternative legal entities, like public benefit corporations, give legal protection to the managers of a company pursuing social impact at the expense of shareholder financial returns. Loans with social purpose covenants can restrict the use of proceeds to lock in social mission. For instance, you could give out a loan with a low interest rate to a company that can only serve a hard-to-reach segment of the customer population that it will not be serving otherwise. Stock transfer restrictions can require shareholders to sell their shares only to buyers aligned with the company impact goals, maybe making transfers subject to the board approval. Finally, we share a set of financial incentives that investors can use to drive additional impact in an invested company. The investors gives up some financial returns in exchange for extra impact returns. That investors can agree to reduce the interest rate of a loan upon the achievement of certain impact metrics. Equity investors can allow share redemption at a discounted price upon the achievement of certain impact metrics. Fund managers can agree to receive their full carry interest only if the company or the fund achieves certain impact metrics. In each of these cases, the investor is taking more uncompensated risks or lower financial return to get greater impact. All of these examples are described in detail at impactterms.org.